So good evening and welcome to this meeting of the Audit and Transparency Committee. I'm Councillor Gerard Hargreaves and I will be chairing tonight's meeting. The meeting is being live streamed on YouTube and members of the public and media are welcome to watch the meeting remotely and listen to the discussion that will take place. Before we proceed with the meeting, I would ask members of the committee and others in attendance to please make sure your mobiles are off or turned on to silent, please. I think it will be appropriate for us to start our meeting with 72 seconds silence to remember those who lost their lives in the Grenfell tragedy. Thank you very much. So we now turn to the agenda before us. Item number 1, apologies for absence. I don't think I have any apologies for absence, do we know? Any declarations of interest? Do any members have an interest to declare?
My role at the PSAA, I know that's sort of flagrant interest, but we do discuss the audit fees, which the PSAA sets, and also the corporate forms referred to in the planning documents.
Yeah. Okay, thank you very much. Have we got that? Any other interest to declare? We turn now to the minutes of the previous meeting. I think we have 2 sets to consider here, haven't we? So the draft minutes of the extraordinary meeting that took place on the 10th of February were circulated to the chair, Councillor Gardner and Councillor Summons and Andrew Link. Are we happy for those minutes to be agreed as a true record?
Yes.
Thank you very much. And the second are the minutes of the 17th of March, circulated to the committee members on the 28th of March. Draft minutes were published. There was an issue with numbering of the paragraphs, which I think have now been corrected. So unless the committee have any other issues and disagrees with the minutes, and I sign those as a true record. Thank you very much. Thank you. So we now go on to item number 4, the external audit plan for 2024-25. This report presents Grant Thornton's audit plan for the financial year 2024-25, outlining the scope, the risk areas, materiality and proposed audit fees for the statutory audit of the council's accounts. So Shahina, are you going to introduce this? Paul, you're going to start it. Okay, thank you very much.
Chair. My name is Jacqueline. I'm a senior manager for Grant Thornton. I've been auditing, managing the council's state of council audit for the last 3 or 4 years. So the audit plan provides an overview of the plan, scope and timing of our 2024-25 audit. The highlights of the plan are set out on page 33 of the pack. It's page 13 of our report. The plan sets out the significant risks and our proposed work to address these. Our testing of the financial statements is due to commence on Monday and be completed by the end of September. So we will formally report the results back of our work to this committee at the end of September. In terms of significant risk areas, as with all audits, management override and controls remains a risk, and there's always an incentive for management to report favourable financial results. Consistent with the prior year and other land councils, we also have the valuation of land and buildings, investment properties, the valuation of your pensions asset as significant risk areas. This is due to these being large, complex estimates within the financial statements that require the use of experts to assist the council with deriving the values for the accounts. We also have one-off significant risk this year covering the change in financial systems. The council has moved from SAP, hosted by Hampshire, to Oracle. The financial statements are being produced on the new financial system, Oracle. So we've involved our IT team to assist us with ensuring the accuracy and completeness of the transfer of data between systems. So it might be a bit more challenging this year. The first, when financial systems change, the audit's always a bit more, it can take longer and a bit more challenging. Our materiality, at the planning stage of the audit, we set our materiality at 16.3 million. That's based on approximately 1.9% of the council's prior year gross expenditure. We will update this calculation when we receive the financial statements on Monday. In relation to the other piece of work that we do, the value for money work, at the planning stage, we haven't identified any significant weakness in the council's arrangements. We will focus our work here on the review of the delivery of the council's savings plans, the work the council is undertaking to address financial pressures, particularly in temporary accommodation, the financial sustainability of the HRA, and the implementation of the new finance system. So I'll probably stop there, Chair, if that's okay. The second plan is the pension plan, but I'm happy to take questions on this one first. We'll move to the next one.
Yes, let's just do this audit plan first for the Royal Borough of Kensington and Chelsea, and then we'll do the pension one afterwards. So, who would like to ask any questions or any comments on the audit plan? Liz, you want to look us on?
Okay. Basically, on page 43, which is page 63 of the overall pack, you report on the FRC's audit quality inspection findings, where you seem to have done very well, with the majority being good or limited improvement, or good for limited improvement is required. My query on this is, it was noted in 2023, it was in the press, that Grant Thornton had moved from a tier 1 to a tier 2 in terms of the FRC's inspections. It means that the watchdog will only conduct inspections of firms' public interest entity audits every 3 years rather than every 12 months. And also that Grant Thornton had cut the number of PIEs it audited by more than 70% between 2016 and 2022. So that it was actually only auditing 20 PIEs. So while one of your immediate competitors, BDO, had 217 PIE clients. So I just question, if you're, the FRC's audit quality, is that only 20 audit clients where you're getting a brilliant score, whereas BDO, where under 40% get a very good score, has 217, because that seems to be slightly out. And if it's only 20 clients that are supervised and reviewed by the FRC, presumably it's the ICAW that does the other reviews.
That's correct, yes.
And what are their findings? Because that would be the majority. And did anybody actually review the audit Kensington and Chelsea? That's my other question.
Right, so Kensington and Chelsea wasn't selected for a review by the regulator last year. It is in the FRC category, so it would be looked at by the FRC rather than the ICAW, okay, due to the size of it.
The proportion, you've only got 20 PIEs and BDO is 217, and yet you're saying we've done really well, but they've got 217.
Sure, this is the selection is obviously around the selection of the clients we do. They pick 20, and these are results of the 20 that they selected. I assume.
But you've only had 20 PIE clients overall. You cut.
We've cut the amount of big clients in the private sector part of the business.
Yeah.
That's true, and we are now specialising in more medium to smaller firms.
Yeah.
That is correct.
So I just question, is this fair to sort of claim that you've done really well, whereas BDO only gets, under 40%, but it's got 217 that are subject.
But it's on a percentage basis, isn't it? So
Sorry?
it's on a percentage basis. Yeah, we've got a smaller client base, but obviously they probably only look at a certain amount.
I think we're dealing with statistics, lies, whatever.
I think, Chair, what Paul was suggesting that this is not just local authority clients. This
No,
is
is it?
all
No,
It's all your, but I just think it's slightly misleading to say that, we did really well. We got, 100%, but you've only got 20 PIEs, whereas BDO's got 217 and it's equivalent size.
Sure. So these are the PIE results as well, but this audit would fall under the local government sector audits and the NHS ones, and we've also done same scores, well not same scores, but very well we've got ones and twos across all of them. And the ICAW also reflects that as well in the audits that are not category one audits, so the smaller local government authorities like the district councils that fall into that. We've also done incredibly well in that. So it's across the board that we've actually improved.
Because you did do very badly some years ago.
Oh, some years ago, yes. So I'll hold my hands up. We didn't do so well, but we put in. There's been a lot of quality measures that have gone in. A lot of change in the way that we've done all this. A lot more training's gone into people. A lot more specialism. So virtually all the team that do this audit will be local government specialists. So they only work on council audits and NHS audits.
Chair, is there a request there for future years that the percentage is shown as sample numbers in brackets as well?
That would be fair.
Yeah,
I guess there's a concern about how the statistics are being used and being shown here, and it might be presented in a slightly fairer way. Is that a good way of putting it?
And we can put a comparison between other years as well.
Yeah,
You can see
yeah, I think that'd
the
be
travel we're moving into.
I just had a concern because I just knew that background. Yeah.
Okay, so if we move on to the actual audit stuff itself, Councillor Gardner.
Yes, it's page, just in my glasses, page 39 of the large report, which is page 19 of yours. It's the first time I've actually seen a figure on the percentage for leases, sorry, £100 million of leases coming in via the implementation of IFRS 16. What will be the impact of 100 million coming onto the balance sheet? Is there a corresponding other column?
There will be a corresponding liability coming onto the balance sheet, yes.
Okay, so it's there for accounting purposes, but will there be a negative impact on the council, or what? I'm still not really afraid with what this is going to mean to our balance sheet whatsoever.
So your balance sheet, there'll be assets on the balance sheet, right? You assets on the balance sheet, which will be there, and also be a liability associated.
It'll bolster the balance sheet.
Yeah, it will just be a bigger balance sheet.
It'll make us a bit richer.
Yeah, you also have a liability.
You've got a liability as well, yeah, which will connect.
So it will count, if you read the whole thing, it will cancel.
Yes, yeah.
And we are as a council undergoing an asset review both within property and within the housing portfolios. My understanding is some of those won't be available for the end of the year, if not into next year. So I assume a lot of those would be reliability and sort of things that haven't gone
through yet.
Yes, correct. How will you look at those on a retrospective basis when you come to next year?
Sure, they'll go into next year. There's been a big disposal program. We would then incorporate into next year's plan and then do our work around that next year.
So you won't be looking at any draft as it's coming through?
Not as it's coming through. No, we do a retrospective.
But just slightly follow on again, on page 38
The pack.
of the pack.
Okay.
Yes, let's try, all talk big numbers. Page 38, just the very first bit there about revalues of dwelling and estimates and all that. How do you manage estimates and reality, and how does that have an impact later on?
Sure. So we in this area of property valuations, we have our own expert as well. So the council will have Simonson Webber as their valuers, will value the council dwellings and the schools and things like that. And we'll have they'll produce a valuation report that our valuer will look at and challenge. And there's inputs into them valuations. So there'll be like the size of buildings, the indices used by the valuers. There's obsolescence factors like the age of the building that go into the valuation. And on investment properties, there's yields and the rental values that you get all feed into the valuations. But we'll have a look at them inputs, and we'll also, the council will have like the size of buildings, for example, where they'll have measurements, and we'll agree them to site plan.
And how do you agree if you get two reports that vary? How do you agree?
If we disagree, we would discuss with the council and their valuer, and then come to kind of like there might be some grey areas, but there'll be some middle ground. And if there is a disagreement, we both disagree, we'll report it to you, and then you'll make a decision on whether you wish to adjust or not.
Andrew.
So page 33. So you've given our audit fee as 477,000, significantly higher than the last year. You say that there's extra work on the review and testing of the new system.
Yeah.
Could you tell me how much that costs?
I haven't got an absolute breakdown with me at the present time for that moment, and that is determined also by PSAA. That a £427,000 is the scale fee for PSAA, and it was that scale fee. I think this year does include that. We did tell them about the changing.
So can we be given that number so that if we look at then the fees next year, we start with the fee?
You would have to get that from PSAA because we wouldn't have that information.
Can we get
So we can check that.
We did get a breakdown and it was around 50,000 for the
Okay.
Right, so the purpose of the question is that when we look at the fee next year, you'd expect it to be taken out.
Yeah.
And then the second point, special additional fees this year to include audit of the all operating leases and entry onto the balance sheet. That's a to be.
That's a to be confirmed at the moment. Yeah, we're not entirely sure across all London boroughs we've put at the moment a question mark there, but we're not expecting it to be. It's starting not to be the tens of thousands, but we are expecting it to be 5 to 10,000. It depends on how good the authorities are with it. But until we get underneath the arrangements and how the calculation is done, we don't know at this stage. So we didn't want to put in a guesstimate as it were.
Okay.
But we'll keep the council updated as we go along. And with the council, we have looked at the arrangements last year on when we looked at the accounts because there was a disclosure note. And we looked at what relief registers the council were using and how they were identifying all the potential liabilities of assets. So then the arrangements were quite good. So we are fairly confident that it should hopefully go fairly smoothly again.
So you're expecting a material extra fee. Now moving on to materiality. Now you've moved up materiality number.
Does
Does that influence the amount of work you do? And are we getting less for our money?
So it does have a little implication on the amount of work we do, but when I look through the balance sheet, it won't change any of the categories. It won't change any of the work that we actually did last year. So we're doing exactly the same amount of work. What it will do is we might have slightly smaller sample sizes in some areas because the materiality goes into our calculator, which feeds our sample sizes. So you may have a small decrease in sample sizes, but where we've done this at other places, we've just done our NHS accounts and we've applied the same, we've changed the kind of materiality level there to benchmarks. We're in line with our competitors. We found we haven't actually done that much less work. It's just slightly smaller sample sizes, not much.
Okay, so your opinion is it's solid in your view.
Sure, yeah, we're still looking at exactly the same amount of, so we're still looking at all of the numbers you expect us to for the balance sheet, provisions, the debtors, the creditors, the fixed assets. So every category in the balance sheet was material in last year's will still be material in this year.
And then still on materiality, could you just explain to me, because I haven't really picked it up, how then you work out and apply the 70% to get down to performance materiality? What does it mean? Does anybody know what it means?
So the performance materiality is for our testing purposes. So I think the overall materiality is 16.3 and performance materiality is 70% of that. So when we do our testing, we make sure that we test everything as 70% of performance materiality. So if it's material but not above our performance, if it's material but not above our performance materiality, we would still test it. So we test everything. Performance material is what we use. So we test everything that's at the performance materiality or below.
Our temporary colleagues and me, can you grip this?
Yeah, and the other thing I noticed, because you didn't set any performance materiality in the pension fund. So how are you testing that? So you're saying,
the pension
yeah,
fund.
no, but I mean, it's not, they're not comparable approaches. So you've got a performance materiality for the council.
Yeah, we should have a performance materiality for the pension fund. So when it comes to the pension fund, I'll have a look at that because we should have.
It's not a draft.
Yeah, will you go back a step and
Yeah.
just have another go at
Sure.
explaining what that means?
So let me find the number. And the number will be later on.
There is a materiality page, isn't there?
Yeah.
Page it's page.
Page 3
Yeah.
13 of your plan.
Yeah, page 43. There's that. Yeah.
So it's the performance materiality is 11.4 million. So we would test every single balance in your financial statements that's above 11.4 million. Which will,
That is
Yeah.
70% of
What?
60.
and that's 70% of 16.3.
So any individual transaction,
Any individual transaction in financial statements or any balance in that financial statements that's 11.4 million or higher we would test.
and what is the theoretical?
And that's actually most of them, that's actually all of the balances in your balance sheet and your annual account will be above 11.4 million.
So I'm only asking, where does that?
Well, I'm just trying to understand the materiality because we start with the 16 and then we suddenly
The
introduce.
11.4 is more for auditors and that will try out our testing.
The lower number is actually more stringent.
Yes.
Yes, so, I understand.
Threshold.
Yeah, and then, but why are you doing it? What are the factors that?
That's the firm's approach and the auditing standards require you to have a kind of performance materiality.
And does this compare with other firms as well?
It does, yeah, and your performance materiality depends on the percentage can change. So we use 70%. You can go down to 60, 50%. If you think the authority aren't as good as you are producing accounts, you could probably drop it even further to 50%.
It's a confidence measure.
Margin
Yeah.
error, is it?
Yeah.
So is it confidence in your client?
Pardon?
Is it confidence in your client or confidence in?
It's in looking at previous years, if you found a lot of errors in last year's accounts, for example, you'd have a lower performance materiality. If there's changing officers and you weren't confident of the officers that were now put into the role and stuff like that, you would potentially.
Okay, so just I'll stop later the point. So if it was 80%, that would be a more positive
Sure.
assessment.
We have a top limit of 75%.
Okay,
Yes.
that's all right. So
So you're not right at the top, but you are fairly high.
That's
Risk-based.
disappointing.
Yeah.
What more do we need?
okay, well, I'll pause the road. Thank you very much.
Good, thank you. Okay. Can we go to? What's the page goes on now? Review of last year's comments and
Oh, that's page 45.
45, yeah.
Yeah.
And just so, obviously you raised the issue, you've received an answer. Are you generally content and happy with the answers you received? Do you have any concerns about those various issues?
So the answers we receive are fine on paper. We will go into when we do our testing. We'll pick these up as part of our testing to verify the answers we can give it to management, and then we'll report them back to you and we'll get findings report.
Right, so this is not the final
This
answer.
is not the finalised. This is the kind of council's initial response, which sounds appropriate, but then we'll go and test it when we do our testing.
Okay, all right.
I'm just sort of in line with that, and one of them is the kind of two-stage validation, which hopefully is going to come through Oracle, is that right? So I was going to ask that question, so that's good. But I was going to ask the more general question. I liked on pages 26, 27, some of the kind of areas you're going to look at. I'm glad you're looking at them. one of them is the Oracle transfer, and it's obviously gone live on in April. I just wondered how that had gone, but obviously we'll get a report. And also I was glad to see the medium-term financial plan, because that's actually one of the risks. I was surprised actually the risk wasn't a bit higher, so it's something you did. So it's going to be very useful to have your opinion on that.
Yeah.
But I mean, on my sort of actual question, how has the go live gone?
So the go live has gone well so far. We've successfully run the payroll for April and May. But we're now June. So it's for 3 months. We had a window in March when we didn't pay suppliers for a sort of short period, because that's what you do when you cut off the time between systems. And we're now getting to the point where we've nearly caught up with that. So again, that's good. The processes are settling down well. There's some teething in some directorates in terms of making sure that they're following the new processes that are within the systems. But there's been a lot of good training, a lot of good awareness raising, a lot of good support through the new help desks that have been created in-house, because we took all that back from Hampshire in terms of that transactional support. So a lot of that's gone really well. So there's a report going to Overview and Screen, which we'll make sure we share with the committee as well. And I think that's going next month. So we'll make sure you get to see that Overview and Screen report as well.
Right, so far so good, and also we're getting some good specialist auditors. It's good. And how we got to do the sort of two-stage authorisation now?
So on journals,
Yes.
yeah.
Yeah, good.
That's the answer.
Just a very quick one. You mentioned in your introduction about temporary accommodation and the housing revenue account. And I wondered if you could say a little bit more about that, just from where you're coming from a point of view of audit.
So this is in the value for money kind of section of the audit. And we flagged this as it's been a bit of a crisis point across London with the cost of temporary accommodation going up. Councils obviously hit the council's budgets. So our work will be looking at what arrangements the council has to kind of combat this, address this. What kind of ideas have you got? And then how are you implementing them, and what impact they have?
Right.
So that's what we'll be looking at there.
Right. And in terms of the HRA, would that be the same?
The HRA, I think, is more looking at like the 30-year strategy and kind of financial viability over a longer period of time. That's where the focus of the work is probably going to be.
Excellent.
Thank you, Chair. So on page 25, where you're talking about the background, you've got staffing, housing and digital transformation. And within the digital transformation paragraph, you put in the second sentence, crucial for improving service delivery, enhancing communication and other factors. But you said in your introduction, I wrote it down, that in relation to the IT significant risks on page 33, you've got change in the bullet point 4, first paragraph, change in the finance system from SAP to Oracle, but you're only going to be auditing transfer of data between systems. And you mentioned that you've got a specialist IT team coming in to help you in the audit. So when I looked at the audit strategy on page 47, and we'll look at pension one in a moment, you look at page 47, and you look at the first 2 bullet points. First plan level of IT audit assessment says, we do not plan to test. We do not plan to test in the second one. So I'm a bit concerned about the scope of work you'll be doing in the audit, because I think you've audited other Oracle transfers accounted for, which have led to sort of financial problems. And I would be a bit concerned to understand the scope of work if all you're doing is data transfer, but you're not testing actual data, actual systems within the IT delivery system. That seems a bit contradictory to me.
Sorry. So we will be testing obviously the transfer of data. We'll be looking at your reconciliations that you've done between SAP and Oracle to make sure your transfer has been complete. We will then sample test and pick balances off the new system to make sure that they exactly match the balances of the old system, and do that vice versa. We have a 2-way approach.
So just going slightly above that then, do you have this is what the Oracle system is supposed to achieve, this is what the system is that's been implemented, does what's been implemented match the system, rather than just looking at specific components? Because if you only look at the data transfer, but the actual implementation hasn't actually achieved what it's supposed to do, as an auditor, isn't that a failing?
Sure. So we will be doing both of that testing, yes.
Okay, because that didn't come out of the.
Yeah, and the first bit's around SAP, and we placed reliance on, so the work on the SAP is done by a separate audit team, previous ledger system. So before it transferred over to Oracle, it was hosted by Hampshire. So we have a controls auditor report that does all the testing of the controls and how SAP works. So we can place reliance on that. So when we say we don't test it, we review that report to make sure something else has done the testing. So we don't actually repeat stuff that someone else has already done.
Okay,
So we'll be obviously doing that testing. We can't rely on anyone else to the Oracle system, so we have to do our own testing from the Oracle system.
I understand. So just to badger home the point, where it is improving service delivery, does your audit test to see if service delivery has been improved?
So not for the financial statements testing, it's testing if the financial statements are correct. But as part of our value for money work, then that's where it will feed in there.
So you will be testing.
So we'll look at that for the value for money work. Yeah, how has the implementation gone? Has it delivered value for money? Have you done what you thought it was going to do at the beginning? What arrangement did you have in place? How did you go through the controls processes? Did it all go to plan? What could you improve? What have you learned from it? That kind of stuff.
Okay. So all of those that sort of detailed scope of work, I couldn't find it in the audit plan, but you're saying that that's actually going to.
That's in the value for money kind of section. Yeah, that will be on value for money work.
What I didn't understand is, the financial reporting and pensions administration system, we say we do not plan to test the design and implementation of these, but in the pension scheme, they're going to be tested. So I just didn't understand the difference. Why you'd not have it in one and have it in the other.
That one here, you've got.
It was on page, you're on
It's
page 47.
Of the plan.
That's the financial audit plan, and then if you look at page 53, so
Where's it?
93, that's the audit strategy for the pension fund. There's some.
In both those cases, the work as Paul described is done by the external auditor provider.
Yeah.
So there's what's called an ISA 3402.
That's right. It's similar to the
controls report, which it was so because it's a system managed by them. They are the ones who let their external auditor carry out that work effectively.
Sure.
They then give us the report, which we use for internal audit as well as Paul.
Why is the plan different from the pension fund and the council? That's what I don't understand.
So in the past, Paul's team would not be able to test the SAP controls on the council side in the same way they couldn't the pension, but they rely on the ISA 3402 report from Hampshire for that. We do other work as we do on the controls the council had management and oversight of, but not those inside the Hampshire arrangement.
We could be a bit more clear in the plan. We'll be clearer on it in the final report. We'll be clearer.
And those reports in we're in the best position now because we and Grant Thornton were going to see all the controls.
So Paul, there's some lack of clarity there.
Yeah, we can improve.
When you come back.
We can put that in the final report. Say.
Because I guess we look at the council and the pension and put them together in a way, don't we? You see differences.
Yeah, I see a difference. Then you get confused.
So just kind of because I was looking at significant risk. So if somebody else is auditing something and then you don't check it and you just accept what they give you, I would expect to see that as a significant risk.
Yes.
Because you've not audited what they've done, but you're saying that that isn't a significant risk. Is that right?
So again, repeat the question.
And you've relied on a third-party auditor.
So we've relied on
Just
we
they
go through a certain set of procedures that we do to enable us to place reliance on that third party.
Okay, and then is that not a significant risk then, as far as your audit?
Well, the overall valuation of a pension asset will still be a significant risk because of the size of the valuation, and if the financial system is only one part that plays into it, you have an actuary that does probably the largest part of this, but takes the figures that are produced by the financial system and then puts them into their kind of actuarial models, which have different assumptions like discount rates, age of people who die, and that kind of stuff. And that's probably the more risky element for the estimate, because there's a small change in like the discount factor can have a massive change in the liability position of the pension fund.
Yes, of course, sorry to belittle this, but of course, if the actuary changes it, you'll be able to interrogate.
Can we do that when we do the pension one?
Yes,
you'll be able to talk to them, but you're not going to be able to.
Yeah, we have our own actuary that then interrogates the actuary in that.
Can we are we sticking to the council one?
Yes. Yes, mine is a point that goes to the style of report as opposed to content, so help people to do more content, please.
Do it now, please.
Right, so, first of all, I didn't understand on page 29, when you do our commitments deal, if you look at the same page of the pension report, page 75, there are different commitments in there. So in the pension report, you have a commitment to the chair of the audit committee, and you interview the chief executive twice a year. That isn't in the audit paper. And I would think surely there should be similarities. The pension scheme might have less.
Yes.
But it was just an observation. And secondly, my big observation in this age of climate change and environmental things, I find this really challenging to read when you are using only a third of the page because you've got that much brackets inside and you've got really small type. And then between everyone, we have a divider. So we waste paper, we waste trees, we waste colour.
Sure.
And I would like you to take a
I'll
word.
go and take that back and
Just
think about it.
fundamentally
Yeah.
ask about how can you make the photo score a tad bigger? Because when you get to subsequent paper where we're doing the responses and the audit risk, I can read those much more easily.
Sure, we can definitely take that away, particularly the font size and stuff, and make that easier for you. And I'll definitely take out some of the pages. Obviously, it's a kind of like a 10-page document, but I can change
I
it.
think that even as a firm ethos, you.
Sure, yeah, no, I understand.
Because
Yeah,
I
no,
just
it
think
makes perfect sense.
it's outdated
That's
in this day
fine.
and
Yeah,
age.
yeah. No, I'll take
It's
that
very
back.
nice.
Yes, very nice.
Okay.
I think what we try to do is break it up a little bit more to make it easier, but yeah, I can understand your point.
There you go. I'll leave it to- Thank you.
So if you just go finally then, and then we'll move on to page 1 to page 53 on the timelines. Are we on the timeline? Is that?
So far, we're about to start on Monday, our main bit of work. So all the planning's been done to time frame.
So this is it, stand on that page
As where we are on that page, it's up to date, yes.
Okay, right. So on that one, committee, can we note this report, please? Agreed. Can we then perhaps, as we've done some of the issues on it, when we move to the pension report, do you want to say anything extra, Paul, on the pension report?
So it follows the same format as the council plan. The highlights are on page 78 on this one. The work on this one, the pensions fund has just started, but it started this week. We have a separate team that does the pension plan to the council plan. It may have, because we've now split the teams like this, may be the reason why we've got a little bit different pension plans. We need to have a look at to make sure the finance report. As well as the risk of management over the controls, here we have risk around the more complicated investments to values. So some of the private equity and also the pension funds got direct property that put it home, so they'll have to pay as well. So they're the two key risks. The materiality is 22.5 million. I say using performance materiality here, we do use performance materiality, and for the pension fund that'll be 70 or 75%. That big up to 2.5 million. We have a separate materiality for the fund account because the fund account's a lot smaller. When you look at the net asset statement, it's where all your investments sit. So there's huge balances in there. When you look at the fund account, which is the ID account for the pension fund, the balances are a lot smaller. So we have a separate materiality to make sure we test contributions, the pension payments, your transfers in and out. So we make sure we cover every element of the fund account as well. That's why we have a separate materiality there, because if you use the 22 million, you would hardly test anything at all on the fund account. I think that's it for the pension fund.
Okay, comments, Liz?
Yeah, I mean, I suppose my one real concern about this was the pensions holiday that's being taken, the contributions holiday by the employer, where you say on page 74, the investment committee has agreed to take an employer contributions holiday against actual management advice and has potential to settle to legal challenge. And I suppose I do have a concern about that, in particularly having gone through the KC advice that we received today. he said in paragraph 2.33, well, that's fine.
But we are correct in saying that in the end, the decision was up to the committee. They had advice, they listened to the advice, they made a decision, and that's within their powers to do that.
Yeah, and on a financial aspect, the pension fund is over like 200% funded. So very unlikely to.
Well, as of the 2022 assessment, is that right?
Yes.
So I mean, we'll
You'll have
find out
another
whether we're still
assessment.
in that position in 2025.
Yeah, so you're going through that process at the moment, and you'll have another assessment for March 25, probably at the end of the year.
Did you say you?
No, I just felt that the legal opinion that we had is that it's for the actuary to decide, and I still have a concern. Okay, I know we haven't had a, the timeline has gone. I just.
Yeah, I think people look at it in central government, and the regulations are being rewritten, I think, to
I think
propose the retail.
There was a change in 2020, actually, the regulation 64A, which the summary.
Yeah.
Because there is a vagary in there, so you could take it either way.
Okay, so we're in the clear anyway.
You are in the case.
But Liz, I think what we will do is we'll just minute your concern and then minute it and stay for the record.
And Tara's as well.
Yeah.
Sorry.
Can I just ask when we will hear the next valuation, the 2025 one, when that?
I think it's around the December, January time, because you'll need to implement it for April. Probably, yeah. And this holiday period actually affects next year's audit. So because it affects it.
Right, so by then we'll know.
Yeah.
Yeah.
I don't think that comes to this committee, does it? That comes to the investment.
We're slightly we've discussed this many times before, we're slightly in an unusual position here in that we are reading a report on a committee that we don't really have any control over. But nevertheless, it's part of the overall finance and part of the overall audit process. So that's why we look at it. But all of this will have been rigorously looked at by the investment committee. And we are sort of taking it on faith that we trust what they've said as going into it. Liz, we are taking it on faith that we'll. Good. Great. Claire, do you wish to do?
Yeah, I was just going to note what Liz was saying. It seems to be the case that the other committee has taken advice and made a decision, as it is duly entitled to do. But it appears that that may have been against advice. And potentially we are now in the clear, but that may be down to luck. And maybe as a committee we've got to note.
Okay. It may also be down to a good judgment by the committee.
Indeed, absolutely.
So it's a balance thing, isn't it? And we have raised some reservations. They're in the minutes, and I think that's as far as we can do as a committee. Any other questions, Councillor Jackson, on the pension?
Just a very quick one, Chair, in relation to the IT strategy, on page 78 of the significant risks, I note that the Oracle implementation is not a significant risk, even though clearly I don't know that the IT system goes wrong. Problem.
So at the bottom on page 78, it's got a risk of incomplete or inaccurate transfer of data to the new ledger.
Okay. So, but that's only data to the ledger. That's not the overall implementation of the Oracle system. It's only in relation to the pension.
That's related to the pensions aspect. We've obviously we'll cover the other aspect in the main audit.
And then looking therefore at page 93, which I mentioned earlier, it's only the data transfer elements of the Oracle.
But this is the main risk for the pension fund, yeah.
Literally just making sure they've got data from point A to point B. That's all you're doing in the audit, is that correct?
Pass testing, as well as doing the two-way test, which I explained earlier, we'll also be doing that, yeah. And obviously, as the main council, we'll be doing the other testing, which is pretty relevant to the pension fund.
That's a specialist team that will come in to do that.
Yes, we have an IT audit team that comes in and does that separately, yeah. None of my team will do that. That's a separate team and a separate director that looks after that, and we'll get the work report whenever they'll do the testing.
And is there anything in the pension fund that is audited by somebody else that is given to your team which you then just accept and manage?
No, we use DWC as an actuary, and that's relevant as a prevalent across the whole public sector pension fund. And they look at for the actuarial valuation, they look at the different assumptions applied. So the RPI, the longevity, the discount rate, and they'll all the actuaries across the sector. There's about 4 or 5 actuaries, and PwC will give an opinion on each one, and we'll review their work and see, and if we need to challenge that from the actuary, if the things are outside the range that PwC expects, we have to provide challenge. Yeah.
So apart from the PwC actuarial, you don't get, there's nothing else.
So we'll use our own experts on your, so you've got direct property and a pension fund, we'll, same as the council, we would use our expert to do that, but all the other testing is done by him.
Okay, Tara?
We did get another document from this document, key decision, arrangement with the RBKC pension fund to help alleviate temporary accommodation crisis. I wasn't quite sure whether anyone's going to be discussing that, or whether this committee looks at that.
That's something we can, when it comes to talk about medium-term financial strategy risks next time.
I think outside of this, and I think we need to have a proper item on it so that we understand it, because it's quite innovative and quite new.
Yes, that's what I
So we
think.
need to do that. And it won't be part of this audit anyway.
But it'd be good to, yeah.
So on the pension one,
Can I just double check? So you talk about planning materiality and specific planning materiality on page 88. And then on page 89, you refer to headline materiality, specific materiality. I'm assuming it's just the change, they are the same, the figures are the same, but the titles. That just to hang over.
Yeah, so the headline material is 22.5 million. We haven't reported in here a performance material, which we've also reviewed, which will be 75% of the 22.5, 17% for us.
Yeah, I think
So
going
it'd be
forward,
really helpful to have some consistency.
Yeah.
So yeah,
And back my course.
I'll say about, because we've used 2 different teams for the first time this year, I can see you picked up some differences, and I'll make sure for the audit finance report that.
But even these 2 different things in the same report. Yeah, thank you.
okay, last one, Andrew.
Well, it's just a reflection there. It seems to me the decision to take a pension holiday is very material for such. And it may not be a responsibility of the committee, but I think it would be good practice if we've been advised about it, had a chance to discuss it, or be aware of it. This is a very complete coming to us, isn't it? Because other committees, another committee has made the decision, but it is a very significant change.
I think, Chair, you mentioned earlier, this was a decision for the investment committee to take, and what we're trying to do before.
For information,
Just to make you aware that this decision had been taken. I think we have to be careful about sending you every decision that's.
Yeah.
Well, it's not
Yeah.
prevention. I would push back against that. I don't think this is back in the category of every decision. It's a very material change. And it's a change.
For another committee to take.
Sorry?
For another committee to take.
But I think it is important for our understanding of the accounts.
In the budget, you would have mentioned it, I'm presuming, because obviously therefore that holiday would have an impact in review for the 25, 26.
I think we have discussed it at this committee in terms of the drawdown loan, and when we were discussing that, part of the financing or part of the risk element of that was that we were actually taking this decision was happening. So we have had it
may not have been at the
about
meeting.
here.
I can't specifically recall it so much.
but I mean, not saying you're wrong, but
What we have discussed is that we'd switch from a liability to an asset,
yes,
and how that changed audit emphasis. Definitely remember that. But I don't remember then I don't remember anything.
Okay,
about it.
let's. I mean, I definitely do remember discussing in relation to the loan we were waiting from DCMS, from housing
Okay.
DLUC, yes. But anyway, I think the point they mentioned that actually we still have not got right, and maybe we'll never get right, the relationship between the investment committee and this committee. But maybe that is actually quite a big decision, and maybe we should have highlighted it a bit more in our work. Because if the question is, in the end, is if we're not informed of things, how can we have a sensible discussion on them? And if we can't have a sensible discussion on why they're coming to us, then it's a difficult line, I know. But what I think there's a feeling is on that particular one, we might have been given more information and highlighted a bit more, because it's quite a major decision.
It's worth also saying that there is at least one, if not two, independent members on the investment committee.
Yes, yeah. So I guess going back to the risk of the KC's advice or not, they would have been involved in making that decision as well. Yeah. And we know how important independent members are and how wise their decision making is, because we experience it. So should we note that report and move on then to item number 5. Item 5, informing the Audit Risk Committee as part of the process of event risk calculated a question to manage on fraud, laws and regulation related parties, going concerns, account estimates. Are you going to lead on this?
So, yes, basically the document has a series of questions which the auditors have given to us, to management. The management will provide the responses on there. So these are things that the auditors will take into consideration when they're planning for their audits. And like you said, taking off areas like fraud, laws and concerns raised. As opposed to just articles to note our asbestos and to see if there's something they want to comment on.
Okay, really, I guess for us, but we'll keep the discussion. Is there anything that's not on here that we think ought to be on here? Presume this is a standard.
That's correct, yeah.
Questionnaire that goes to all
It's a standard outcome.
Okay, we've got management responses to those. I have just a big question on 11, which is about related parties. There is one councillor who apparently is not returned. Page 1, 3, 2, 4.
1, 2, 4.
One's initial fear is that me? And if somebody doesn't return it, what's the process?
But we do some other checks as well. So we check if they disclosed it in previous years. We go to company's house and see if they've got any register that's there and do some checks there. We obviously would report it as a failing in the audit findings report as well to you, so you're aware. And if they had any of their companies that they were willing to do just checks if accounts value transactions with them companies, they may not do.
It's quite thorough, I appreciate it, but what happens if we get non-compliance by even one councillor? Or is it never?
We have repeatedly sent reminders and the executive, the director.
Yes, yeah.
She's requested it. Normally we go to the whips, but if you're an independent body member,
okay,
we can only go to them. So we've gone as far as we can.
That's something to pick up. That's something to pick up elsewhere. Yeah. So any other questions on that paper, please? Liz, Tara.
I just had one relation to actually the same question. Is do you check with public registers as you
Yes,
see what things have been actually put on the website and whether they're up to date?
Yeah.
Thank you.
And then I just had a point. I noticed that the fraud cases had dropped dramatically in the prior year, page 121. I think there were 266 new referrals and concluded 365 investigations. 23-24, there were 540 new referrals. That's nearly double. And concluded 1,219 investigations. And I suppose it just, why, the sudden drop in fraud, are we not picking them up or what's happened? What's changed?
So I'll go and double check. I'm pretty sure that's National Fraud Initiative, which happens every other year. So we get lots of referrals from the NFI. So we submit our data every 2 years to Cabinet's office, along with every local authority, Companies House and other agencies, and we get a load of matches back. I'm pretty sure that's down to the NFI match the previous year being higher.
Yeah.
And it being lower this year.
I think they're right, because we're seeing other councils as well. So I think
Okay,
it's
so that's
just
okay.
referrals from residents, members, staff,
Yeah.
and so on this year, not the NFI.
Right.
Okay, that's fine. Thank you.
Any other questions on this? Councillor Gardner?
Yeah, I was sorry to see on page 116 that there was a payment out from the agreement which we lost, which was the community equipment. And I know last time it was flagged as something that we were vastly fighting was apparently settled during. First time we've heard it settled, so I was sorry that we hadn't heard about it before. On the next page, later on in the papers, it looks like we've changed the arrangement for the Notting Hill Heat Network Company because it was going to be guaranteed. Is that right, or should that be under 6 in terms of guarantees?
So which page? So councillors.
So it's page 117, item 6. So this is any guarantee contracts. We had been going to do it via an SPV, risk purpose vehicle.
So my understanding was that the leadership team took a decision very recently
So
to
it seems
change
to
that.
appear later, and I just wanted
Yes,
to double
yeah,
check.
yeah, yeah.
Fine.
Which we need to make sure is consistent. Yeah, absolutely.
And then under 8, for you, Mr. Chairman, are you seeing this list of solicitors and fees? Because this is, to me, the thing that never gets to see the light of day. And I think you and the chair of OSC should be looking at this as you do with Grenfell sums and settlements, because I don't ever have any exposure as to what the external solicitor spend is, or indeed on what matters. And I just think that should be coming to this committee, whether if it's sensitive, then it should. I'd be comfortable with you and chair of OSC saying, well, if I ask this question every year, I don't feel I ever get the right answer.
So look at that, Chair.
I don't recall having explicitly seen it, whether it's been in a document, but in terms of it being put in front of me, I don't recall that.
No,
I
I think yes. Sure. And then, sorry, page 114, item 12. This is fraud issues do arise. I wondered to what extent it should be reported to the chairman or the GMs. 124, 2 minutes. Whether it should be item 12.
124. Yes.
Whether it should be reported to the chairman if it's out of audit and transparency cycles.
So
this is.
Can you start again? So I got
Right. So page item 12 on 124.
Yeah.
Which is reporting fraud issues to the committee. And I wondered if fraud is identified out of an audit cycle, because we go through blips where we have no meetings and we have lots of meetings, whether actually we should be expecting you to be notified as chair that fraud has been identified.
So we do provide 6 monthly updates on the accounts.
Yes,
But that's
if there is something that comes up that's significant.
I think just in the process of looking at it, define what we mean by significant.
Basically, you have 266.
No.
But for me, it was the outcome of the. It was the outcome of the. It wasn't the referrals. It's the outcome.
223.
There were 365.
Those were
Positive outcomes related to prevention.
Be careful.
So any significant cases, Councillor Garvey, we put them out of conversation with the chair.
I'm looking for the chairs.
Hang on. So a lot of those we would see because they're within the reporting cycle. We'd see in the 6-monthly report. What you're saying, I think, Councillor Gardner, which is a very valid point. If there's any significant fraud that falls outside of that, then it is probably good practice to bring it to at least my attention. Yes. And I think that's fair.
It's an unusual.
Yes. Okay. Thank you.
And on page 128, so this is compliance with development laws and regulations. So I presume this is because as part of the audit we have to have said we're satisfied that all relevant laws and regulations are applied with. The answer here, yes, the answer here actually says, well, we might not report them to the Audit and Transparency Committee, we might report them to the leadership team, depending on the breach. And so I looked at that and thought, is there a perceived gap here that should be closed?
No, I think that's referring to the monitoring officer has a specific responsibility to report through to leadership team on particular matters. That's what that's referring to, rather than saying that we're trying to.
But does the loop ever come back to here? Because we have to have this, we have to sign off that the audit committee is satisfied that all relevant laws and regulations.
I suppose we would do that, but yes. So we've done that.
I didn't want a separate silo conversation going on that doesn't come back to here.
So we've done that already in terms of what's happened in the Grenfell, for example. that's something where we would come back and report here.
So perhaps also the answer to
Yeah.
just do the final bit about. And I think I only have one more on page 139, item 12. The very last point. How is the Audit and Transparency Committee provided with assurances on accounting estimates? And it says briefing sessions continue to be held with key councils throughout the year. And again, I asked, do we feel this is the case for Audit and Transparency, or should it be?
Which number as well?
It's the very last bullet point. So I'm just very conscious that you always get this letter every year that says you the audit committee, have satisfied yourself that X, Y, and Z,
The briefing of the accounts.
Yeah, so we do a briefing on the weekend before, we pre-make, before we put the accounts on your right. So that's referring to that.
So we are the key councillors, or some of them.
I didn't read that as being the key councillors. I read that as, for example, the property lead being the key councillor.
But in terms of those charged with governance, that's complex estimates, that would be us.
Now so do you feel you've been briefed during the year? Continue to be held throughout the year with us?
Well, there's always a balance, but you know, we can have a briefing at every committee meeting, or we actually have a slightly more structured where you do that as part of the reporting on the audit process. I feel as confident as I can be in terms of A, that we get the information, B, we get it in the management process of the committee, because there's so much comes under our remit.
Yes, we just
that we have to manage the amount of we have.
I mean, when I subsequently went on and looked at the pile of things that are estimates later, I was actually I felt it was actually, they were all special skills for the independent people. So perhaps the answer just needs an extra line in to say that actually the audit committee is given a specific briefing as part of the pre-audit.
Briefing session can help the council, including.
Yeah, approved.
Yeah.
Thank you.
Okay, any more on that, please?
Thank you, Chair. Page 123, and you mentioned it, paragraph 9. On the second paragraph, the last sentence is the council also has an independent confidential reporting system called SafeCall. I wanted to understand what happened once a council officer reports to SafeCall. What happens next? Does anything ever come back here?
Yes, it
Because
does.
the chair knows that there's been a SafeCall.
So the detail of every call comes back to myself and the head of fraud, Andy Hyatt, and we then report in the 6-monthly update on the fraud aspects where we've had whistleblowing allegations raised through any routes, including SafeCall. That's again that's the control, the oversight is it coming back through that 6-monthly report where we receive all of those, irrespective of what the nature of the allegations is. And we then would look to make sure that the appropriate department or we would investigate depending what the nature of the allegations was. And then we would report, we hold a central register to then report back to you here what the outcome of those allegations
So,
is.
as Councillor Gardner said, if there's anything significant between those 6 monthly ends, you'd obviously report that to the chair.
Okay, can we then note that report, please? Yeah, we then move to item. So thank you very much. Can you thank your team as well for the excellent way, as usual, and that doesn't decrease what we're saying, getting the accounts out on time, being ready for all the questions and the way you've managed the whole process. So thank you to you and your team. And were we one of the first councils again?
No, we've not yet published, due to publish on the 30th of June. Been a bit delayed with the new system and getting to grips with things.
We'll get the link out to all the
The actions, yeah.
So well done. Thank you very much. Paul, good to see you. Thank you.
Thank you.
So hot desking, we get our next team in, please. Thank you very much. Thank you. So, item number 6, risk management update. Which relates to the risk register, which we've got. The register was reviewed by the executive management team last month and was presented to the joint leadership team and will be presented to the joint leadership team next month. This report has been submitted for review by the committee in line with the agreed 6-month reporting cycle. So Maxime, David and Joe are going to be here to present and answer any questions on it. And as we know, Maxime comes once a year to our committee.
Well, yeah, at least.
At least once a year, and more if requested. So our chance to really look at the risk register and make ourselves content and happy with the process of the risk register and how we are being presented, how it's been presented to us. So who's going to lead us on this?
I'll kick off then. That's okay, Chair. So as you say, the register is reviewed formally every 6 months, and we look at new risks every 2 months at executive management team risk and control board meetings. So we've got one new risk, which we've increased the score on this time, which is around the support for bereaved survivors and local residents. So we're in a position now where the government has announced the deconstruction of the tower. Obviously, we're waiting for detailed plans both from government and the NHS to support for local residents while that process is ongoing. So we recognise it's going to have a significant impact on the local residents. It's important we have good visibility of and assurance on the plans that are going to be in place to help support local residents through this difficult and prolonged period of deconstruction. We've got a couple of risks where we're looking to remove and amalgamate. So risk 8, the corporate performance monitoring, has now been really embedded into the way in which reporting is done to leadership team and through scrutiny and through the council plan action plan. We're also looking at a wider risk around inspections, not just CQC, but actually the regulatory burden on local authorities, not just the RBKC, but across London, across the country. And then we've looked at 3 new risks at the EMT last month. So one is around the rising costs and challenges in providing care for children with complex needs. This is something which is having a massive impact for all local authorities. It's a time when there's pressure both on local authority budgets, but also on the NHS and other partners, and actually funding issues and tensions between those and their partners as well. You'll be aware from some of the media coverage about the kind of funding of the Notting Hill Carnival to make sure it's safe. So the officers actively involved in conversations with the partnership, multi-agency partnership there. We're still working hard to make sure there's a safe carnival for August this year. And the one I mentioned earlier about the regulatory burdens piece, which is another piece, given all the new regulators that come along with inspections that council now to prepare for and to be able to respond to, and the kind of implications if there's an adverse inspection outcome for the authority and for residents. You'll note that actually there's only one risk where the score has changed from last time. So now I've done is given some analysis about the kind of number of the planning mitigations that are either being completed or have been reviewed or have been added since last time. So you get a good sense that the way in which we're managing the strategic register is a very active one to make sure that we're on top of what the mitigations need to be. We're looking in 4.10 at a couple of new risks that EMT discussed last time. One is around this fragility of partnerships and funding, particularly with health and the police and others, and where the council typically has been and is being expected to pick up the gap. This is not common. This is not just unique to us, but to other boroughs as well. And also looking at how we bring together all the different risks around the market that supply to RBKC and the local authorities. So where you've got dominance in the market with one provider, which means value for money is difficult. Then you've got fragility in terms of the care market, and when you've got the risk of supplier failure as well. So it's trying to bring all that together into one risk around how we manage the supplier market to make sure you get good value but good continuity of services. Joe's also here very kindly because we're doing some work around how we align the way we report risk, performance and finance data, so you get a much more sort of rounded picture of what those risks look like and how we can focus on those strategic aspects of risk as well. So looking how we both service this committee, but overview scrutiny as well in terms of that reporting, is to bring that much closer together, which I think is a really good thing to do to help you see that complete picture. Some involves the dashboards, the heat map, which are there to help visually to display what we're looking at this time from the May risk register. So I'm going to pause there and we'll have to take any questions.
Yeah, I think rather than add to that, if that's all right, Chair, I think we're better just summarise the changes.
Can I just start really by a general one, and it comes through in some of these, but just in terms of the risk of ongoing finance for local authority, and almost you could put it in every risk, couldn't you? That's there, because underneath it does. Just give your thinking on as much as you can, which is a crystal ball, I appreciate to some degree, and the impact on risk and how we're going to manage that going forward.
Yeah, so I think the risk on the funding has really changed since this report was written for the committee. So the medium-term financial strategy you'll be aware of, and that went to opening the scrutiny committee at the beginning of last week, and that is showing a financial gap in the year 26-27 of 20 million. That we do have a savings and transformation programme that is quite well established and well oiled now, and we've got programme of work looking across a whole range of potential savings, both from generating more income, more efficient use of our buildings, through to savings within services. On Friday, the government published its consultation on funding reform 2.0. That's what it's titled, and it is a revised funding formula. It isn't yet possible to say the exact impact on the council. Firstly, it's a consultation, and we have until early September to respond to the consultation, and we will be doing so, talking to other authorities, the Society of London Treasurers, in particular, all the Section 151 officers are looking at that in a lot of detail. But it is very clear that boroughs with low council tax compared to the average will likely lose out financially, and that is because that is a very significant part of the formula. It assumes an average council tax, and our council tax here is around half the national average. So now the government is likely to propose some dampening measures so that we wouldn't see the immediate impact of that, but that measure just alone will cause a significant impact. What we haven't yet been able to evaluate, and nowhere has, is what the impact of that is on our medium-term financial strategy, because obviously the medium-term financial strategy is how well prepared we are to deal with this. So we basically need to decide kind of how to treat it in this time of quite significant uncertainty between now and when the funding consultation closes, and then later in the autumn when the government make their final pronouncements on it.
And just going forward, in terms of the risk register and how we manage that, as things become more uncertain and more unpredictable, are we going to need to increase the number of times we look at the risk register, how often we review it? How do you see that playing? Yeah,
so I think the risk itself is probably quite well captured in the risk register, particularly there's one about there's medium-term financial strategy, but there's also kind of economic and financial instability. Of course, we've got global factors going on at the moment. We don't yet know what the impact of the situation in the Middle East it will have, but it might well affect fuel prices, might well affect other things that will also have an impact on our finances. So I think the risks themselves are quite well captured. I think it's more of a question of how well prepared we are to meet the challenge, and also how practical and feasible it is to meet the challenges that we face. So it may be that you want to look at the risk register more, but perhaps more likely you'll want a deep dive around the preparedness of the council to meet financial challenges.
When you think about events around the world, there's always going to be events around the world. What I was more thinking about is the future uncertainty of
Yeah.
financing local authorities.
Yeah.
Just the other thing which is referenced in this report, we have the financial uncertainty around health at the moment, in particular, the funding of ICBs, what will happen, the future structuring of the integrated care boards in the future. So I think it'll stop being uncertain in the autumn, and we will be clear then the amounts of money that we'll be getting, and also how the effect will change, and also what the government policy on council tax is going to be. Because at the moment, for example, the council would not be able to double our council tax overnight, because the threshold, even if we wanted to, which we might well not, but the percentage impact, percentage rate at the moment, there's the maximum let a referendum is 5%. So it's not yet clear. So I suppose what I'm saying is, in relation to the specific question, is I think at your next meeting, you will be in a better position to evaluate how you as a committee want to look at the risk. But right now, there isn't any. It's too many unknowns.
And if I may indulge just one more question, and that's in relation to partners, and you touched on this.
Yeah.
All partners that we work with are going through the same as we're going through in a way. And it does seem, some other committees I'm on, there's a danger that other partners are going to. Local government always seems to get everything, doesn't it? And when anything else fails, it comes from local government. So I just wonder how we are factoring that in, how we're thinking about that in terms of all the relationship with different partners who are all seeking to save money.
Yes, I mean, there's obviously a general context of saving money, which has largely been driven still by post-pandemic recovery, the war in Ukraine and the inflation that resulted from those different factors is actually more of what we're all dealing with. What the NHS and health services are specifically dealing with is a restructuring within the integrated care boards that is really affecting their ability to engage and fully participate with the council. In terms of how we manage that risk, I mean, that is why, thankfully, we do have different departments. So, that relationship with the INCB is led by our Exec Director of Adult Social Care. It's a by-borough arrangement. So we work as well very closely with Westminster around our positioning around that, and members here who are on the some of the other committees as well will have seen that play out in respect to mental health services, end-of-life care recently. So I think it really is that distributed, responsibility, so that we can work on multiple fronts at the same time, and then use committees like this one and the leadership team to sort of come together and have that full view of everything.
Thank you. Comments from the committee?
I have one quick one that is about cyber, which is on page 153, high number 10. And if I go to details that you've got on page 168, 169, just looking at a couple of things. At the top of page 169, it says a 481% increase in phishing attacks per month. To RBKC email addresses. So obviously we have the team in place to tackle that sort of increase. But when I look down at the proposed plan mitigations at the bottom of the page, and if you look at the first one, introduce regular audit of third-party management systems. If you look at the date for completion, it's an annual review. Now, given that things in the IT cyber world are changing much, much quicker than 12 months, is that the sort of the right time frame to be reviewing things in this particular area, where other councils have had huge problems because they're not reacting quickly enough? So I asked that question. And then the second question is really, given that we are very, very focused on cyber, should it even be a 10 or should it be downgraded to very low? Because our systems are in place to tackle all of the issues in relation to cyber. So yes, we identify it's a very high risk, and we are putting a lot of resources, time, people and money into it. But are our systems sufficiently robust where we feel comfortable where we are? And therefore, it isn't actually 10 risk, it's actually bottom left-hand corner. So I just asked those two questions.
I'll take the second question first, Councillor Jansen. So I think in the public sector in particular, it's recognised it's a when, not if situation with cyber attack and something getting through. So actually, on virtually every local authority's risk register, this is the highest, one of the highest risks that they have. So you're doing lots of mitigations to stand still. So the increase in phishing attacks that you mentioned there is significant, but it's not unique to us. It's something that's happening across the piece. So I think we've recognised that we need to be constantly vigilant and looking at other and different measures we can put in place to make sure we're managing risk effectively. The third-party management one is something where the IT service are looking at with contract managers about how they're looking at their suppliers, make sure they've got the cybersecurity arrangements in place, and to make sure we've got the annual assurance that actually that those arrangements are being checked. So we've got hundreds of suppliers. We can't possibly check each one each day. So we've got that cycle to make sure we've got the assurance with contract managers that actually when we let a contract, the cyber arrangements are appropriate, but through the contract, and we're checking with the contractor to make sure they are. Because you'll know from a number of the recent sort of cyber attacks that are in the media that actually it's not free through third-party suppliers.
This is why I was asking
Exactly. So this is why we are very robust in terms of what do we do in terms of letting a contract.
There's part of procurement, you see that.
And contract management, and what do we do regularly to make sure the contractor is upholding those arrangements and is making sure that they're in place. So we've got, that's why, so rather than being a defined date, we've done tick, much more a case of actually to keep doing this and going around the cycle with all of our contractors.
Because of course, really the nub of my question is, we don't control our contractors. We don't control how often they do their updates on their cyber, so we don't know how robust their systems are. If any of them integrate into ours, that of course is clearly a weak point that anyone can potentially exploit, which of course has been done before.
Yeah.
And I'll just put that out as a question, because if we're reviewing something annually, we'd have to have retrospective. Yes, we've checked every month with our supplier to make sure that they were there, but how do we get confidence as an audit committee that they've actually done all of those things in the interim?
Yes.
How would we know?
Yeah. So what we also have in addition to this is we have a dynamic risk assessments. But we have a third party who we use who actually monitors our some significant third party suppliers. There's a separate arrangement where they're actually they're doing this for lots of other parties now, that they're actually giving us that assurance on a regular basis if there are any issues with either non-compliance or with cyber arrangements actually being reduced or ceasing. Suppliers, so we get to know early about those situations. So we're not just relying on what we say in the contract, what we say with our contract managers, but also what the market is telling us in terms of the ongoing arrangements in those suppliers as well. So there are a number of factors between.
And so just to finish off, if a supplier gets a cyber attack, is there a process in place where they notify us immediately they have a cyber attack? So
they're required to notify us. We've had instances where that has happened.
So, for example, NRS was the subject of a cyber attack. There are equipment supplied for disabled people, and that was something which impacted lots of authorities who use them and they managed the impact such that it didn't have an impact on the recipients of services. But that, and I suppose that's a good example as well of where a cyber attack on an organisation like that could potentially put the data of our residents at risk because we have to share the data. But what they don't have is an integrated system with us, because our systems, if we were like Oracle, for example, that is integrated with our systems, but that's been through all of the kind of checks and balances of an IT, of the procurement that our IT do. NRS have their own IT system, but we share data with them, and that's the risk there. It's not a risk to our cyber, but it's a risk to our residents through potential data leaks.
And the first question I asked was whether it's always going to be high, or whether it should be downgraded if our systems are robust.
I think it's best to keep it high because of the way not it always really. So even though we do everything we can to mitigate the risk, it's really hard to reduce it
I mean, you could argue, say, well, we mitigate it from a 5 to a 4 is possible. It's almost like we want to give it a 10 and then bring it down to a 5, which obviously is not within the methodology.
And the public sector particularly, this is why it increased, I think, at the last meeting, from 5.4 to 5.5, because the public sector particularly is being targeted, particularly by state actors as well. So it's something that we're.
And as we head towards the local elections next year, then that risk, intensifies.
Any other questions on, so I guess on that, again, there says annual review there, that's slightly misleading, isn't it? Because actually it is a daily review of us, isn't it, but
It's quite a different way to express that.
who wanted to, Tara? Sorry.
Actually, I really like the reporting that you've done here and the way it seems to be being managed, because we can actually see what you're doing. Thank you. Just a sort of process point. Some of these things like cyber, we probably have detailed questions on, not only on the kind of rating, but also on some of the mitigations. I've got kind of probably about questions, or about 7 of them. They're the ones that kind of concern me. How are we going to kind of systematically deal with those, or is it not for this committee? Are we going to have some deep dives on the ones that we think are the most important?
And that's the
how do we decide? Is it for our committee?
It's for the committee to decide which areas they want to go into.
So I think we need to be, probably as a committee, a bit more forthcoming on areas that we want to do deep dives into.
And the order.
Because we need to program them in,
exactly.
A to make sure we get a good spread, and B to make sure we've got officers coming to talk on us in that area. So if you have some ideas, Tara, of issues you'd like deep dives in, can you let David know?
I'll put my ones in. I'm sure other people have got their favourites, but we'll probably all agree on cyber, for example.
Yeah, we've already discussed that.
Yes. There's some other questions I've got on cyber, but
And in relation to the cyber, obviously you've mentioned here the CISO, the Chief Digital Information Officer, those would of course be the people that we would like to see.
Yeah, indeed, yeah. And you haven't asked.
Thank you. Page 161, risk 5. As you respond to a major significant. I don't really understand the second half of that strips out capacity to respond. Because actually, I looked at that and I thought, why that caveat? Because actually, it could be it's the wrong response. It's a substandard response, as opposed to it's a capacity issue. And so I genuinely looked at that thinking, would it be worth revisiting that risk description?
So this is something we have revisited recently. It's not necessarily recognising that our arrangements for responding to a major incident that since Grenfell has improved significantly. There's a lots of work both before the public inquiry report came out. We've now made some further commitments in the council's response to the phase 2 inquiry report to improve those arrangements further. I think what we thought was realistic to recognise that there may be some events that no council could deal with by itself. And that's where the reality of the risk description, something we thought merited that, given what happened previously as well. It's, things have improved immensely, but actually there are still situations where we may not have that capacity as a single authority to respond to an event.
You see, I find that fascinating because when I then looked at those mitigations, because you've got 3 about staff benefits and a lack of staff, I read that as actually you didn't have enough staff on ground. So
we have many more when we continue to get more.
Your explanation doesn't really match my reading of what your mitigation plans were. So I think.
So we do have significantly more staff in all aspects of our emergency response now who are trained, and there's more to come in terms of training as well. But I think how we plan for something that was beyond our capacity, did we deploy all staff to an incident?
That's still capability. I don't know. So I think
the capability and the structures and the processes of the organisation are much better. And as a gold.
David is on the gold rotor, and in fact, right as we speak, I'm on the London gold rotor. So what I think this is trying to capture is that sense of that it is a constant process of training, keeping up to date with national frameworks and standards, making sure that we've got enough staff on the ground and available, you know, who can come to the borough at short notice. And even whilst doing all of that kind of good preparatory work, you never want to be complacent about an incident actually happening. And I would probably go a bit further than David to say that what this is meant to capture, not just a sort of very large scale event where we might need mutual aid. And as you were questioning, I was thinking actually we probably ought to have something in there about seeking mutual aid if required. But it's as much about if you're dealing with an incident on multiple fronts, and particularly in a borough where we've had such a serious and tragic incident, and so where people are you know, very kind of heightened to a major incident and its impact, making sure that we as the category 1 responder could respond to that. So those ambers, for example, are, you know, because those are not those. Some of those are new commitments that we made in the inquiry response, and you're not fully complete yet. But also, you know, so the gold and silver commander training is something you have to constantly repeat. We've got 250 of staff, I think, on our emergency roads in the different roles.
I guess there's always, you were saying, there's always, you don't know if something beyond what we know.
But I do think we should probably add something in here about mutual aid, which is one of the things that we particularly criticised in the inquiry.
Okay, and the customers.
Thank you. I've got a couple of reflections which I would like to sort of feed back to you, if I may. When we're talking about risk, we can have risk to the council, or we can have risk to residents. And this list of risks seems to kind of combine those different types of risk. And I'm interested in that balance. So, for instance, when we're looking at the 4.6, the support for bereavement survivors, the outcome, the risk that we're concerned about there is harms to the residents. Again, when we're looking at the one we've just looked at, responding to a major incident, potentially there may be a reputational risk, but actually, as we've seen, the outcome of not meeting that risk would be actually harms to our residents. And I suppose I'm on one level, I'm curious, given that we have an audit and transparency committee, what might have been the risk register prior to Grenfell that enabled the things that didn't happen to not happen, and even after Grenfell, in the Grenfell response and recovery, why were the risks of harms to residents not included there? And I appreciate that's a sort of slightly historical thing, but it's something I'd be interested to understand, given that harms were done, given that we have had secondary deaths, which potentially could have been avoided. They were perhaps not considered risks or not mitigated risks. And that brings me to the next sort of question, if you like. When do we consider a risk to have come to fruition? So I think there are some here around the housing, about people being overcrowded or not kept in safe homes. Number 3 on page 158, for instance, due to lack of capacity or resources, necessary investment improvements so that residents are safe and live in properties which are in a good state of repair, sufficiently warm and dry, are accessible and have well functioning facilities. Now, to some degree, I think we could say it might be the case that some of our residents are not living in safe properties in a good state of repair. I think.
Okay, so we'll take that as a question. When does a risk become reality?
Yeah.
So if I might start on that, and also picking up your first point, David can give the kind of the professional answer in a minute, but I would just say as well that every single one of these 22 risks is about risk to residents, and the reputation of the council is only important insofar as it relates to our services to residents, and and our ability to function as an organisation to deliver services to residents. So it's important to have a trusted reputation, or to try to build a trusted reputation for those reasons. So this risk register is really tries to focus on that, and obviously this committee very importantly spends time looking at, as we just did with Grant Thornton, looking at the kind of what sits behind that. But all of that is important because of the service to the residents. In relation to that sort of what about a risk that has come, where we are aware, which we are, for example, in the one you picked up, that there are homes that are not yet at the decent home standards, and so we're aware of that. And so I suppose the risk register is about the plan to get us, how robust is that plan to get us to the point where all of our homes are meet decency standard. David, do you want to add on that sort of risk likelihood?
Yeah, so and effectively in risk parlance, if something is already happening and happening consistently and significantly, it becomes an issue. So rather than being a risk, so you start to manage an issue. I think what you described there, Councillor Sims, is something where there are definitely issues for individual residents and individual families, but collectively the work that's being done is still seen as a risk there that we don't do with that for everyone. So there's a bit about that's a lower level being an issue, a real issue for individuals. I think Maxine's right. When we embarked on the new risk reporting arrangements in 2018, former chief executive was very clear. These risks need to focus on risks to residents, not on risks to the council's reputation. So I think again, when we've introduced risk 22, we're very much looking at the regulatory burden, what's that going to mean for residents? What's that going to mean for service delivery to residents? Not what's it mean to the council being overworked, having an adverse assessment. Is what will that mean for residents in terms of service delivery? So I think there is always as a risk professional, actually, often people don't see the difference between risks and issues when something's already there.
But in a way, that's about that regulatory burden, that in itself is a risk, isn't it? Because actually officers are spending all their time on inspections and not on direct. So it's always difficult to put a divide in these things, isn't it? Because they roll over to each other.
So thank you very much. Chair, can I ask, because I'm relatively new to this committee still, I feel from what I've heard that this risk register represents, shall we say, quite strong improvement on perhaps types of risk registers we were looking at prior to Grenfell. Would you say that's fair?
Yes, I think this committee has spent a lot of time challenging the risk register and seeking improvements to it, not only in terms of the content of it, but the layout, how easy it is to understand. So I think where we are today, if I may say, is partly as a result of the work we've done on that, and therefore we need to keep doing it, to keep getting it better, and to make sure that we get what we want. So at the end of the day, we have to be happy with it. Is that fair, Maxine? Would you?
Yes, I mean, I think
that's not
I'm not particularly familiar with the risk register sort of pre-2017, but certainly the focus now is on trying to make sure that they are grounded in reality, grounded in the services that we deliver to residents, but still maintain a fairly strategic level. That's always the balance, and often what in management team and joint leadership team we're talking about the risk being sufficiently strategic that you're not having to either update it every 5 minutes or it's just too much in the weeds. But you can give sufficient assurance that that the risk is well managed, and I think we've got to a place with this now where it is better at that. But as that's why, for example, we're saying, well, it shouldn't just be about CQC in terms of regulatory burdens. It should be about other issues, and with the market failure or market fragility point, that probably needs to go wider than just say care providers, and thinking about the risk from other pieces. For example, we the the market for highways maintenance has just got like 2 or 3 big players in it now. So anything like that starts to threaten to have different potential impacts.
Thank you. And no doubt we would, of course, claim absolute top priority in having got this to where it is today. But thank you to you and your staff for also planning that part, because I know you spend a lot of time as executive directors, again, we're seeing the outcome of that in this year. So thank you.
I think I'd just say, because I've seen it right from its inception.
Yeah.
This is a 15-year run at it, and it's quite interesting hearing the conversation, which has gone from largely about form rather than substance to substance rather than form now. So this is pretty clear, but this is a world where there always will be continuous improvement as we learn things. So we'll never say we've got there, but it's hugely better than it was.
That leads on, Joe, do you just want to say a couple of thoughts about the work you're doing on this linking risk performance and financial data?
Yeah, thanks, Councillor Hargreaves. I think it touches on some of the points that actually have been made this evening. I think David and I have been discussing for some time the fact that the strategic risk register, for all the reasons we've discussed tonight, is an incredibly important document that captures some of the things that we need to be concerned about and monitoring as a council. And I'm very keen that we kind of look at it in light of some of the broader commitments, the broader priorities we have, so that really cuts across the kind of what we report to the Audit Scrutiny Committee around performance and progress against delivery for the council action plan. It also covers some of the work we're doing on savings transformation, given the very substantial financial challenges ahead. And crucially, it also covers some of the commitments we've made in response to the Grenfell Tower inquiry. Now, I think for some of the reasons we've discussed tonight, it's important that the kind of view of risk is not tied to existing council plans and priorities, but it's clearly crucial that there's a dynamic relationship between the two, so that those plans and priorities can be amended in light of some of the significant risks. And to Councillor Simmons' point, I think there's probably a little bit more we could do to think about what comes to this committee, what comes to OSC in terms of looking at mitigations. Are we talking primarily about kind of external shock risks, extreme weather, finance, cyber, or are we talking about risks that are more about the kind of delivery of the council's activity? And I think we could probably, through this review that we're suggesting we'll do, we could just look to make sure there is that alignment, and perhaps through that to strengthen, to bring them a bit more clarity about what is the business of this committee to scrutinise and what is the business of the Audit Scrutiny Committee or some of the select committees, in terms of really getting into the detail of the mitigations to say, look, we think this activity is right or isn't right for mitigating this risk.
Yeah, that sounds really good.
Just because it's been in the press a lot recently and it's always an annual issue, the new risk you put in around Carnival, risk 21, is there anything you could just add to that in terms of what James has put it in?
And you'll have seen a lot of coverage in the media, and the media reporting on it has been largely accurate. Carnival is obviously an enormous event and really significant cultural event on the streets of Notting Hill at the August Bank holiday. And there is a well-established partnership across this council, Westminster Council, the organisers, the police, the Mayor of London, and other organisations as well, transport, who sort of looked to support the management of the logistics and the overall safety of Carnival every year. This year, the organisers commissioned a review of safety that was supported by the police, us, Westminster Council, and the GLA, and that review that they did of safety, which was carried out by event experts, highlighted a number of new sort of safety measures that they wanted that were recommended to be introduced, which we've all there's real common view that across all parties that needs to happen. The challenge is a funding one, and that's why you see you'll have seen stories in the media about the organisers approaching central government and that there is it's an ongoing discussions. There's probably, but also in terms of the remit of your interest and remit is that there are discussions going on with the organisers and the other parties about mitigations in different scenarios. But I think what we're all agreed that the big focus here is about safety and crowd safety. It's the numbers of people who come to Carnival and what that means, particularly on a Monday afternoon, that is at the top of everyone's mind.
And bearing in mind we're mid-June now,
Yeah.
are you confident that discussions will progress at a rate that's?
So I'm really understand that the organisers are working really hard on meeting the recommendations. So I think we're probably not close enough yet to a solution whereby that's a kind of fully funded and resourced sort of proposition, and that everybody, because I was thinking, police have to be content with the arrangements. All of those things need to happen, and that's not. The organisers are not at that point. I mean, it's for the organisers really to comment on that.
We are not the organisers.
It's really for them to comment.
Thank you. Any final comments on this before we? All right.
One question, but it might be for the kind of deep dive. I really, it's not the highest risk by any means, but the Lancaster West stage, and the kind of change in the delivery model. I don't really understand that. And I just wondered whether it seems as though there was an SPV or something. Is there, I mean, I see that you're going to get financial information, but only in April 2026. I just wonder whether there are any financial implications of that change, but
So
for another time.
I'm happy to share the report of Resolution 6. What that does is it sets out one sort of de-risking exercise. So it actually makes it simpler for the council to put in place and to operate, and actually cheaper for residents when it comes to the billing. And
It's not
stuff
really
like
right
that.
up or anything.
I can send you the paper resolution to we've had a discussion about
The purpose of being because the reason that a company was set up was because it was a funding condition. Well, that was one of the main drivers anyway. Actually, there were other reasons as well, but there was a funding condition. One of the grants used that funding condition is no longer applied, and really our preference is simplicity. So if we don't need to have company structures in place,
There's no right up there.
Let's go back to the Carnival one because that's the one that is the most risky to people, whether they're visitors or residents. That's also the one that, I understand that the police have said they'll do crime, and therefore it's from the organisers, the Carnival company, to organise the stewarding. So it's both a funding issue, but it's then a training issue, and whether the stewarding is sufficiently well resourced and well trained, or indeed respected in terms of when they give sort of orders. So for me, that's the one that I look at, and at the moment, that's the one that's ringing massive alarm bells, because the police have just said we're not doing it. Yeah, and so you look at that and you go, so if the police are genuinely withdrawn because they need to do their 14,000 shift hours otherwise over the weekend, will they? Is it blind man's bluff that they'll actually step in and do it, and next year it'll. What I don't want to see is that actually ultimately this would come back on the council, because it's on our patch if substandard stewards or stewarding is brought to fall. So I look at this and I go, this is the one that's both time critical, and I don't know whether we do have facility. Yeah.
So you're right, stewarding is absolutely key. The police position on Carnival hasn't changed. They've always said that and they was publicly say that their role is around crime, it's around public order, but it is not to steward an event. They will, however, always step in when there is a risk to life, and this is one of the things that they, so what what they want is a well-organised, well-stewarded event, which they can be present at and step in if they need to and deal with the crime. I think they, have publicly said that the organisers have worked hard to achieve that. So in terms of the role of the council specifically, of course, it is on our land and it is on the sort of judging stage. There's quite a few other significant areas are in Westminster as well. So our job is doing the road closures, and for that we do need some assurance about the event that's going to take place on the roads. Although it's not as straightforward as signing off the safety plan, but we obviously need appropriate information for what's going to take place there. We issue the licenses, and you'll see sometimes there's stories in the press about where a license has been refused, and that's both for the sound system, any events in the parks, and also the food stores and everything as well. And also the clean up, toilets, all of those kinds of things are our responsibility. So we're a partner, but there are a number of things that very straightforwardly sit with the organisers, their responsibility. So whilst we've got a great interest in it, and we want it to work with them for it to be a safe event, but that stewarding is the responsibility of the organisers. And the police take a very close interest in it.
Good, thank you. Thank you. Okay, so this paper is for information.
Yep.
So I hope you feel informed.
Yep.
And thank you to Maxine and Joe for being here.
Thanks for having me.
And pass our thanks on to your team for the work they put into getting the registered. Thank you. Thank you. Thank you, Joe. So can we move now then to item number 7? The report of the chairman of the Audit and Transparency Committee, and I'm assuming there's no comments on this. Anybody wish to make any claim? We think we've left out. What we've tried to do a bit more this year is reflect the much wider range of activities that we get involved in.
Yeah.
And partly I see this document as a bit of a PR document as well, that actually we need to constantly inform councillors of what we do and what comes under our remit. And we've tried to do that a bit more in this report. So it's a bit longer than normal. But any comments? That's very good.
Yeah, I thought it was good. I've got a few typos. I'm really glad.
Those do separately.
And do those separately. And the only thing I noticed is that we do talk about meeting with the external audit separately. We didn't meet with the internal audit separately, but I did notice on the forward planning there was nothing to meet with the internal audit. And we need to do that.
Yeah. I think that was a comment we made last year, wasn't it?
Yeah.
So this will be presented to council at the July council meeting, and hopefully we'll get a little bit of discussion rather than just it being nodded through, but we'll see what the response is on the. Thank you very much. Good. And can we move then to item number 8? Which is the action track of the programme. David, if you want to comment on this, I mean,
there are a small number of items. There are a couple that Liz picked up in the pre-meet, which will make sure everything is contracted and start to be progressed. So these things are in hand and will be done before the next meeting. I think we're working with Darren to get a date. So I'll just and that's true. Review, aren't we? I'll do the papers on risk management and the other bits that Liz picked up on the confidential already.
And the only other thing is the risk management strategy was 0.6.
Yes, I noticed that.
Yes,
Yeah.
thank you.
That was just the point that we made last week about kind of tracking recommendations and actions, which I'm sure you've got on your list.
Don't you just repeat that because not everybody's.
Yeah. I think when we were just at the meeting, we mentioned that it would be very useful in addition to having sort of action tracking, the tracking of the recommendations and management actions.
Yes, recommendation tracking.
Yes.
Yeah, so yeah.
That's it. Thank you.
Good. Anything else on that? And also any deep dives, any suggestions that you've got that you can build in?
Well, just a question for me is that, so I came to the meeting thinking we ought to do a deep dive into cyber, but there's going to be a lot of interest across the council in it. Are we we're the right people to do a deep dive, isn't it? I mean, for that right. It's kind of an issue that we want to just be seen to be doing everything. If something did happen, you were on top of it. So it's a review that other people have.
Well, if Max, sorry, were you in on that?
I'm so sorry, would you mind
The
repeating?
reason I'm saying that, I wonder if that's something we ought to be doing jointly with OSC.
Yes, sorry, would you mind just saying that again?
Cyber.
Deep dive.
A deep dive on cyber,
Who should do it? Where does it sit?
I actually think that it would sit best with this committee as the owners of around risk, because OSC is the committee for resources department, which this covers. So it's probably worth checking in with Mary. I imagine that she might want to deal with it by attending the session or inviting any interested members of OSC to attend this session. But I think it'd be better if this was the meeting committee.
If we do that through the briefing that we've asked Darren to put together for you, and then we can then think about whether you want to inform the committee as well.
Okay, that's good.
Yeah.
Next, I'll just remind you, we've got Jem Kamali, who's the lead member for finance, and Mike Curtis, who's the management of medium-term financial risk as well.
Great.
So the medium-term financial strategy will be circulated beforehand to you, go through over in scrutiny. Hopefully we'll have a bit more information about the consultation as well, to be able to take them in the July election.
What I really like to look into is the childcare costs, but I'm conscious that OSC would probably be really looking to it. It's similar to the fact that everybody likes to look at temporary accommodation, whereas Claire and I have looked at temporary accommodation a lot in housing, and I suspect Children and Family Services has done likewise. But I don't know to what extent it may help to actually share some of the papers onto those committees so that we can actually see what's already been done.
And like us, even once we've looked at them, we've still got questions, then we have a look, we should feel right to ask those questions.
Yeah.
So I'll take that over to you, Jackie, who's the screening manager, so we can make sure we get those circulated to you.
Good. Thank you very much. Is there any other business that we haven't had on the agenda? In which case then, it's the end of the meeting. Thank you all very much indeed for attending and for the discussions. And Maxine, thank you again
No,
for joining us.
Yeah, thank you.
End of the meeting.
That's the last